Assalamu alaikum and welcome to your Stock Sense morning brief for Thursday, December 18th, 2025. Yesterday brought a mixed close to the Pakistan Stock Exchange, with the KSE 100 index experiencing a marginal dip, reflecting a cautious trading day. The KSE 100 index wrapped up the session just over 1,70,300 points, shedding about 133 points, or a slight 0.08%. Trading activity remained robust, with volumes reaching nearly 1.07 billion shares, and the total value of shares traded stood at around 51.8 billion rupees. Looking at the market breadth, we observed 178 advancers against 255 decliners, with 50 stocks remaining unchanged, indicating that more scrips lost ground than gained, despite the index's relatively small decline. Turning to sectors, commercial banks played a significant role in attempting to buoy the market, contributing positively to the index with an impact of around 0.34%. However, the automobile assembler sector exerted a notable drag, pulling the market down with a negative impact of about 0.25%. Similarly, oil and gas exploration companies also contributed negatively, pulling the index down by nearly 0.15%, adding to the overall subdued performance. From a technical perspective, the overall sentiment across various moving averages largely pointed towards a buy signal, suggesting underlying strength. This includes the 10-day, 20-day, and even longer-term 200-day exponential and simple moving averages. However, it's worth noting that the short-term Hull moving average, specifically the 9-period, indicated a sell action. Regarding key levels, the KSE 100 closed just above its classic pivot R1 resistance level of around 1,70,000 points, suggesting it's currently testing a new range. Key support for the index sits around 1,60,250 points, while the next major resistance level is closer to 1,73,400 points. On the corporate front, we have a number of board meetings scheduled. Several companies including Nishat Union Power, United Bank, Lucky Cement, Pakistan Tobacco, and Nishat Mills are holding meetings to discuss matters other than financial results. Mirpur Khas Sugar Mills Limited, however, will be considering its annual accounts for the year ended September 30, 2025. In broader economic and market news, there were some notable headlines. On the positive side, Pakistan's current account posted a healthy $100 million surplus in November, signaling improved external stability. Furthermore, power firms are seeking to refund approximately 5.6 billion rupees for November usage, which could translate to lower electricity bills for consumers. However, several concerns persist. The proposed changes to net metering regulations could significantly impact the profitability of solar power installations. Also, the Karachi Cotton Association's failure to issue spot rates for cotton after 52 years is creating considerable uncertainty for the textile sector. Adding to the challenges, an ongoing transporter strike continues to disrupt supply chains nationwide, affecting various industries. On a neutral note, the SECP has cleared PIA Holding Company's transfer of its precision engineering complex, marking progress in the airline's restructuring efforts. Turning to institutional flows for yesterday, December 17th, we observed foreign institutions as net sellers, offloading about $0.74 million worth of equities. Conversely, local institutions were net buyers, injecting roughly $0.74 million into the market, effectively absorbing the foreign selling pressure. Digging deeper into the local flows, individual investors were the strongest buyers, with net purchases of over $12 million. Companies also showed significant buying interest, with nearly $3 million in net purchases. On the selling side, mutual funds were prominent net sellers, offloading around $14.4 million, while foreign corporates also registered net selling of over $1.1 million. Malik's take is that yesterday's market action, despite the slight dip in the KSE 100, highlights a dynamic interplay between various factors. The resilience from local individual investors actively participating in absorbing institutional selling suggests underlying domestic confidence. The positive current account news provides a much-needed macro boost, signaling improved external stability. However, this optimism is being tempered by ongoing domestic operational challenges, such as the transporter strike disrupting supply chains and the uncertainty in key sectors like textiles due to the cotton spot rate issue. Investors should closely monitor the resolution of these domestic operational challenges, particularly the transporter strike, as well as any further policy announcements regarding the energy sector, as these will be crucial in shaping market sentiment in the coming days. That's all for today's Stock Sense morning brief. Thank you for tuning in. Please remember this information is for educational purposes only and should not be considered investment advice. Always consult with a qualified financial advisor before making any investment decisions. Until next time, take care and happy investing.